All right, ladies and gents, today we're going to talk about liquidity, finally. And just after that, we're going to be talking about the sweep strategy. So, liquidity. Liquidity is one of the most important thing in trading. It's not the most important, but it's the second most important, okay? Knowing the narrative, the direction, the daily bias is bullshit, by the way, is the second most important, all right? And the sweep strategy tells you the bias for the session as well. So, wait for that sweep strategy video. But liquidity, guys, if I ask 100 different people to tell me where's liquidity, everybody will tell me below highs and lows, right? Above highs, below lows, right? Above highs, below lows, right? Why? Let's say you take a trade. Let's say you take a trade here. People are going to be thinking this is resistance. They're going to put a stop loss here. They're going to be like, we know we failed to break above this high. So they're going to be trading a short. They're going to have the stop losses here and try to maybe target this, right? But that's not only one person. There's millions of people doing this. Millions and millions and millions and millions, right? So that means here there is stop losses. Stop losses are basically someone who's shorting here for like risking $200 would be losing $200. Someone might be risking $2,000. Someone might be risking $20,000 for a short. Someone might be risking $20. Okay, there's an accumulation of money there, right? So it's pretty much liquidity. Liquidity just means stop losses. Okay. Stop loss liquidity equal stop loss equal fuel. Okay, very simple. Okay, someone going long, let's say they're going long here or here, they have the stop loss here. Another person would have the stop loss here. Someone like this. So many long. Someone longing $1,000, risking $1,000. They're going to be accumulation of $1,000 here. Okay. And of course, they're going to be targeting highs. That's pretty much stop losses. Where they accumulate is where we call liquidity. Okay. Now, a group of people might be shorting this high, start having stop loss here. Another group of people might be shorting with a stop loss above this high, right? So there's so many different places that people can put their stop losses, right? And wherever there's a bunch of stop losses accumulated in one place, we call that liquidity. So pretty much a general rule, every high, every low have liquidity, okay? But like I said, if I ask 100 different people to tell me where liquidity is from this chart right now, someone will tell me above this high, below this low. Someone will tell me above this high, below this low. Another person will be like above this high, below this low. Another person will tell me, oh, we have so many lows here, that means the most liquidity is going to be here. Another person will tell me, oh, we have so many highs we never broke here, so many people are going to put the stop loss here. So there's going to be liquidity here, above these highs. Another person will tell me, oh, this is the highest high in the game, so this is probably where liquidity is. Another person will tell me, oh, this is the lowest part of this chart, so this is probably going to be about the most abundance of stop losses here, so the most liquidity is going to be here, right? Yes, that's correct. That's subjectivity, guys. In trading, you don't want to be subjective. You want to be objective, all right? So if I want to be trading, I want to be trading the same thing every single time. I cannot be just deciding if I want to short, will I be shorting, put my stop loss above this high or 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 this high? Which one I'm going to put it? Someone will be like, okay, whatever I enter, I'm going to put my stop loss at the furthest high. Yeah, but can you afford that? Can you afford that only to target like this? Can you afford that much risk? No, probably. So how do we fix this issue? Very simply. You just introduce sessions. Boom! You got London, you got Asia, you got New York PM, you got New York AM. Above London, there's the most amount of liquidity. Below London, there's the most amount of liquidity. Above Asia, there's the most amount of liquidity. Below Asia are the most amount of liquidity. Above New York AM, New York PM, there's the most amount of liquidity. Below New York PM, there's the most amount of liquidity. Above New York AM, there's the most amount of liquidity. Below New York AM, there's the most amount of liquidity. Okay? Boom. We just fixed liquidity. Very generalized, very standardized. Boom. Whenever I take a trade, I'm looking for those. We sweep London. We swept previous session high, so Asia high, where there's liquidity. Now the market runs. London swept previous session low, Asia low, where there's liquidity. So the market runs. London swept again previous session high, where there's liquidity. Now it run. Now is it going to come back to Asia low to sweep it to go back up? Maybe. We don't know, but we already had 4 beautiful successful trades today. That's it. Liquidity is equal to stop losses and is found above session highs and lows. Now please pay attention to the sessions. If you want to draw, if you have our indicators, it will draw it for you automatically without any input. If you don't, you will do this. You will draw them on your own. You can find alternatives on TradingView. So, for example, Asia starts at 19 o'clock EST time, all the time EST, UTC -5, New York, central local time, to midnight. London, midnight to 8 a.m. New York AM. We split New York session into 2 sessions. 8:08 a.m. to 13 p.m. New York PM. 13 p.m. to 19 p.m. Like that. Just like that. Now, let me tell you why liquidity is important. I told you there's an algorithm. The algorithm can take the price wherever it wants, and it can bring the price wherever it wants. It doesn't need you to be buying for it to go up. They don't need you to be shorting or selling for it to go down, right? But then someone went by ask me, but hey, Luke, if they can do that, if they can do whatever they want, why are they hunting liquidity? Or why don't they just bring it anyway? Why do they have to sweep liquidity first before going? Well, let me tell you. If I want to go long, if I click long right now, I get filled in. It will tell you on like here, order filled. You've probably seen a lot of TikTok. Order filled. Profit filled. Blah, blah, blah. Order filled, right? Yeah, because I'm trading 1 micro. But the big boys, the big central banks, they're trading millions of contracts worth billions of dollars. If they click like this, for example, they say market order rejected. It will say here, not enough funds or not enough liquidity. Not enough liquidity. Why do they need liquidity? Because there's stop losses. We said that liquidity is stop losses. So how does stop losses help them enter? Let me tell you how. Very simple. If there is London below London, let's say above Asia or just below Asia. Below Asia, there's a lot of liquidity, right? What does that mean? That means there's a lot of stop losses. Okay, nice. Stop losses of who? Anybody longing. So if they're longing, their stop loss, they bought a position, right? They put 1 micro, for example. Their stop loss has to be 1 micro sell. What does that mean? It means they're selling their position at a loss. Then who are they selling it to? If we're selling our position for a loss, and this is a marketplace. We call this market. Why? Because in a market, you have someone buying. If someone's buying, someone has to be selling. If I'm selling my car, someone has to buy it. Otherwise, there's not going to be transaction. If I'm buying a car, someone has to sell me a car, right? Boom. So they bring the price down to where people are selling their positions. There's going to be millions of people buying longs here, like buying the contracts here, and they have their stop loss below these lows, below Asia lows. So there's like a lot of stop losses here. All are sell stops, right? Sell stops. If we're selling, who's buying? The algorithm. They bring the price down to here, because here there's millions of people buying with stop loss. Each one maybe $100 stop loss, maybe $500 stop loss. Another person will be $2K stop loss. Another person will be $1 million stop loss. So there's an accumulation here of millions and billions of dollars. They're selling, and the algorithm wants to buy $1 million of Nasdaq. And here there's millions of different people. Each of them bought 1 micro, 1 mini or 1 micro. So there's million of stop losses. So then the algorithm wants to buy 1 million of Nasdaq. Here there's an accumulation of 1 million Nasdaq sell orders. So the algorithm brings the price down here. They get filled in. Boom. I want to buy $1 trillion here. $1 million of Nasdaq. People here are selling $1 million of Nasdaq. Boom. We got transaction. Order filled. Beautiful. Now they're filled. Beautiful. That's it. Now do you see the market start to reverse, going bullish? It's been going up very fast. Same thing scenario, guys. Now they want to exit the profit. They're in very good profit. They're in 1 million. Now they're in 5 billion profit. 10 billion profit. They try to click sell button. Boom. Order rejected, order rejected. There's not enough liquidity. Please try again later, for example. What does that mean? That means they have to sell their position to a place where people are buying positions. What does that mean? Asia high, above Asia high, we have a lot of people shorting. Oops, let me just delete that. We have a lot of people shorting with the probably stop loss above Asia high. So there's millions and billions and millions and billions of people. By the way, $7.5 trillion moves exchanges hands from one hand to another hand every single day in volume on Nasdaq. And there's over 100 million traders, and there's more than 1 million new trader coming to the market every day. They're all learning supply and demand because they go on YouTube, they write supply, best trading strategy or how to start trading in 2025, and they get sent to videos where they say, see where there's so many highs, put your stop loss above it. See where there's many lows, put your stop loss below it. So they're going to do exactly like that. They're uninformed people. So if they short, their position is -1. So their TP has to be +1, right? To go back to zero, net zero. Their stop loss, if they short 1, so their position is -1, to close their position, they have to sell the position. Sorry, they have to buy the position back, right? Remember, we're renting these contracts. We don't own them. We borrowed one, now we're giving it back. So here there's going to be a combination of stop losses above Asia high, which are, if they're shorting, they have to close the position. So they're selling, they have to buy their position back. So there's an accumulation of buy orders here. Millions and billions of buy orders worth billions and billions of dollars. So the algorithm goes up here. They're already in longs here. They bring the price up here. And finally, they click sell. And they get order filled. Why? Because they're selling $1 million worth of Nasdaq. And all these stop losses, which are buy orders, they're getting transacted, they're getting handshaked. Us retail are buying our position at a loss, and the algorithm is selling its position at a profit. Boom, that's it. Now this same concept happens with London, high, low, New York PM, high, low. For example, New York PM swept previous session high. All the people that are shorting from New York AM have stop losses here. All of them are buy orders. The algorithm is already in the longs, and he wants to get out of their longs by selling their position, selling it to who? Whoever's buying in this area. They cannot do it any random place because there's not enough orders. Maybe there's like 200,000 worth of Nasdaq, maybe 500,000 worth of Nasdaq. But here there's more than 1 million worth of Nasdaq because it's a session high. Each session is pretty much about 5 hours to 8 hours worth of stop losses. Okay? Compared to a 1 minute candle or 3 minute or 5 minute swing high where there's might be just a little bit of liquidity above it. Does that make sense, guys? I hope this makes sense. Liquidity is the most important thing to understand. It's not the most important thing in trading. It's the most important thing in learning. So what's the most important thing in trading? Knowing where the price is going to go. Draw on liquidity, where the price is drawing towards. Daily buys, where the bias is going towards. So how do we determine that? We're going to have a video on its own, but just a sneak peek. Our strategy tells us on its own, which you're going to see in the next video. London sweeping previous session low means that all these people longing here, they sold the position to a loss. Then who's buying? They're selling the position. The algorithm is buying. That means we're going to be looking for longs. That means the bias is long. Then the liquidity is higher. The narrative is higher. So that gives you, our sweep strategy gives you the bias itself. London's were previous session high. So anybody here was shorting in Asia, they got stopped out. What kind of stop loss? They're shorting, so their stop loss are buy orders. Then if we're buying, who's selling? Smart money or the algorithm. They sell the position here. They finally enter $1 trillion worth of Nasdaq, and they bring the price down until they can get out where there's lows. Okay, very simple, very easy. Hope you guys understood. Next time you're gonna see the sweep strategy. I know I've been saying that for quite a time, but I don't have a script where I'm following. I'm not a content creator. I'm not trying to make this the best videos. I'm trying to get you guys running, hit the ground running, guys. That's what you need from me. That's what you need from me, boys and girls. You're here to make money. You're not here to see me flash you nice flashcards, nice snippets, nice captions, etc. You don't need those stuff. Those stuff are fancy and aesthetic to the eyes. if you're just an observer, but you're here to make money. You're not here to be observing. So stay patient with me. Love you guys. I'll see you guys with a sweep strategy video next video. And it's going to have a PDF on its own that you can see it, step-by-step guide that you can reflect to it. You read it once and you never have to read ever again. You never have to read it ever again, and you never have to find another strategy ever again. So I'll see you guys next video. Love you guys. Peace.